Video looks a bit doesn't look great today, so hopefully that'll improve as we connect. So I say, hope you're all well. Usual scenario with our setups here for these live broadcasts. Anything you want to look at in particular, please let me know. Stick it in the chat box, and we'll have a look at it. Today, usually quite quiet on a Monday, but it's the start of the new month. It's a very busy week this week. We've had some manufacturing PMIs out from Europe and UK today. They've been sort of better than expected, to be honest. The overall final reading for the euro came in line with expectations. The UK one was better than expected. It hasn't really helped the sterling this morning. We've got a resurgent dollar at the moment, and we've got that. Sorry, what was I saying? Yeah, sorry, I lost my thread there for a minute. Resurgent dollar index at 6-week high. Euro, dollar yen at 11-week high, 104.94 earlier. I don't know where we are now. It's trying to push towards that 105, but it's come down from that. I've lost my yen chart. There we are, 104.93 as I speak at the moment. So sort of dollar come back into a bid mode a wee bit. Very strong week last week for dollar yen in particular, but there we go. Other things to look out for this week. It's a big earnings week. We've got Alphabet tomorrow, and we've got Pfizer tomorrow. We've got Amazon tomorrow as well. Lots and lots of earnings coming out. Big heavyweight. There are just a few to watch. We've got the key week for oil as well. We've got the big oil majors reporting. Rumours have started to swirl in the oil market with a Chevron, Exxon, Exxon merger, where that'll actually come to fruition. Obviously, it's a wee bit too early to tell on that, but that's the market we're in. We had a big move down last week for the equity markets. We were down 3% for the week. On Friday, we were down 3%. The week was down. The week was down 3%. January itself, S&P 500 was down over 1%. The Nasdaq gained 1.4%, and the Dow was down over 2% for all of January. So a relatively weak January for the equity markets. What caught my eye, particularly on Friday, was the VIX rallying to 37.5 at one point on Friday. We're down quite significantly. We closed around 33, 35, but we're down to 31 and falling, I think, the VIX. So obviously all the story about the big shorted stocks of GameStop and others as well, AMC and Bed Bath and Beyond, and lots of others as well. And that's all rumbled on. And over the weekend, Thursday, Friday, we had this gossip about the bulletin boards, the Reddits, and the Wall Street Bets and what have you in other forums, trying to take on the silver market, the commodity market. So that's rallied this morning again. We're into a fourth day high, but I think it's come off quite significantly. So yeah, we're at 29.50 at the moment for silver. So it's on the up again. We gapped on open this morning from 27 to 28.40, and then we're up touching 29.25, and the futures has definitely touched $30 for silver as well. So silver's having a big old ramp up today. So let's get the charts up. And let's say any requests for assets, please let me know. I just realised I'm not sure I can see the Facebook comments, unfortunately. Let me just bring in my Facebook page. I don't think I only see the comments from YouTube. Let's just have a look. Let's bear with me a second. See if we've got any comments on there. Post. Bear with me a second. So it's not a great deal data to go out there. The highlight of the data today at 5 o'clock server time is the here we go, is the ISM manufacturing from Canada and the US as well. So watch that. Somebody's asking about the PS3. The PS4 has just been announced today, Daniel. So watch that. I don't think your name was one of them. I can't remember. There was two chaps. One So have a look. I think the marketing guys will be posting something on there later on as well. So I'm assuming this is this today. Yes, it is. So I can see your comments on Facebook now. So let me just go back to YouTube, and there's Fun Food Kitchen says welcome, sir. Well, anyway, thank you. Let's get the charts. I'll get rid of my ugly mug. Oops, what am I doing? There we go. Lucky Naxi, somebody's telling me won the PS5. Thank you, Andrea. Anyway, let's have a look. That's the silver. Let's just talk about the sort of asset of the day, really. This is a big gap here. This is the 1 hour chart on the silver RCFD for the silver price. But as you can see, it's gapped up. But as you can see, the move started earlier last week. This was last week, 26th, 27th, 28th. The gossip started on the 28th, late on Thursday, and we've rallied really significantly over this again. Up here. Moving average moving up as the price escalates here on this 1 hour chart. If you look at the daily chart for silver, huge move here on Thursday. Friday we ran to this 27 area, and then we've gapped and tested 30 today on the silver market. But there, buyer beware, as we say. Hello guys, I hope you're well. And nobody's actually asking for anything, so let's just put everybody's name in. Everybody looks like seeing their name on. So Ransol, hello. Hello, who was that? Whoops, I'm flicking too good. Devon, hello, sir. Mohammed, good afternoon to you. Elbow pump to you as well, my friend. Hope you're well. Dr. Basand, hello. Elbow pump to you as well, my friend. Take care, everyone. Obviously, the pandemic is still a major issue. Interesting, obviously different countries have dealt with it in different ways, different approaches. Many talk about the Swedish model. Many talk about how New Zealand reacted in Australia. And interesting, out of Australia earlier today, there was a case, one case apparently in Perth. The headlines I was reading, I triddled into the news, and basically it's the whole city of Perth, from 2 million people, I think it is 2 million people, have gone into lockdown for one case. So different countries are dealing this with very, very differently. I was listening to a news item as well as I was eating my lunch this morning, saying the anti-vax is probably the wrong phrase, but the people who aren't prepared to take the vaccination in America apparently is close to 50%. And the whole point, if people are going to start mixing again and people haven't been vaccinated, what's the point in me getting vaccinated? So there's lots of arguments on all sides of this, but this is obviously a real issue. And we all need to take great care. So, first request for asset comes from Salimi. He's talking about the direction of gold. Well, gold, Salimi, it seems to be it's sitting in the background. To be honest, gold normally has quite a positive January and February, principally because of the big Asian holidays. The Chinese New Year's coming up at the end of it's a couple of weeks, isn't it? 12th of February. In the Gregorian calendar. So that normally gives a bit of a bid to the gold price. But really, if we look at the daily time frame, you see it's generally, zoom this up, gold trends, it's, it's a bit directionless, to be honest, Slimmy, here on the daily time frame. We've had tests, we had these two tests in January of this key 200-day moving average down here at this at 1820 area. See where the 200-day is now coming up to 1820, the red line. Hopefully you can see that. But those intraday spikes on here and here took us down to 1810 as well. So it's a clear $5 to $10 support zone down here. But as far as the close of the market's concerned, it only stayed down here. So 1825 is the lowest close of a day. Intraday, we went as low as 1810. And then the 200-day sits around here, around 1820. So there's the key levels to be looking at for gold. But as far as today's concerned, we had a relatively positive day on Friday and then gave it all up. So that's a big wick. Again, it could be end of month balancing, so don't read too much into that. Although obviously that's a very big wick, very small candle, that would suggest sort of a negative to move forward. But we've bounced a wee bit today. We're at 1861 today. As far as the intraday market's concerned, Lemley is we started relatively positive this morning, as you saw from the close of Friday, and it's continued to accrue. So again, moving average is a bit messy. Crossed higher this morning, 4 or 5 o'clock in the morning. Server time, we ran to R1 at 1868.31. We got a high of the day at 1871.65, which corresponded to the highest close on the hour time frame on Friday. So relatively positive. We'd need to break 1868 to take this higher and then test this 1876 on the high time frame up to the other side. Good evening, guys. Let me just go back to our Facebook friends. Somebody's trying to spam me. Good afternoon, Wayne. I hope you're well. It's been a while since I'm very well, thank you. Hope you're well as well. Relatively quiet on Monday, but let's do it on a Monday for a change. What about cable? Gennard's asking. Cable, hey, broker man, give us free money. Again, as asked about cable. Cable's been relatively positive news around cable, but if we look at cable today, it's down quite significantly. Let's zoom this up a bit. This is the 1 hour time frame. That would have triggered short here this morning, or not this morning, at 1 o'clock. That is. Where are we? Yes. What's this? That's the 1 hour time frame. That's 12 till 1300 hours. That went short this morning there at 137.18, and we're down here at 136.76. A quite a significant fall today. But if we look at the daily time frame, that's still relatively well bid here on the daily time frame. But again, you see this top here, 137.45 last week into the end of January, topping out just so once, twice, 3, 4, 5, 6 times, including today. We've been at this 137.45, which is where our R1 level is today, and we can't break that. So we've moved down today from we've obviously opened around 137 and moved down again today, but still relatively low bid. The 200-day moving average sits there at 136.42, so it's still relatively well bid. But on the daily time frame, but the 4 hour and the 1 hour started to move down. So again, the 4 hour, more of an exaggerated bounce off that. So this is the current 4 hour candle, just about to complete in about half an hour. So -1 again, but we need to test 136.50 and break that. You can see that quite clearly there at 136.50 on the 4 hour to actually move this lower. So it's in a channel here, 137.45, which is where our line is there. Call it 50 for the sake of 5 pips to the support there at 136.50. So a clear 100 pip channel on the 4 hour time frame. We're maneuvering between. Obviously, it's a big week, as said, as far as data. We've got the Bank of England report. We've got the RBA reporting overnight, our server time. We've also obviously got the jobs news. We've got the NFP. We've got the ADP. Obviously, top of the shop, I say, is NFP on Friday, ADP on Wednesday. We've got the weekly claims on Thursday. So a whole host of data on top of all these earnings that's coming out. So lots for the market to actually consume, basically. So where am I? That was Ebenezer asking about sterling. So sterling cable sideways on the 4 hour, negative here on the 1 hour as we move down under the 200 hour moving average. Again, there's that 136 S1 4 hour support, and the daily seems relatively sort of contained at the top here. Wants to break 137.45, and we're going to go higher. And again, the 136.50 even on the daily time frame as well is that key support zone. So break that, takes us to the 20-day moving average. Now we could start to move down to test 136 and then 135. But the trend remains relatively bid on sterling on cable on the higher time frame. Emma was asking. Was that Emma? Sorry, Emma. Yeah, Emma was also asking about cable. So again, that's the time frames. Guys, if you want a different time frame from the 1 hour to 4 hour, if you want a lower time frame, please let me know. Gednon was the last person that's commented on. I can't see all the comments on. Why can't I see all the comments? Let's have a look at all the comments. Facebook's not showing me them all. Yeah, I've got some of them here. I want to show that page. Never mind. Okay, Leanne, that was what was this one? This is Aussie News. And interesting, Leanne, you asked about the Aussie. I was looking at the Aussie on the daily time frame. It's all it's crossed, and it seems to have rolled over quite significantly. Let me show you what I'm talking about. And I was marking this up. I think it might have been over the weekend actually. But if we look at our Aussie crosses here, so the main 4 Aussie crosses where the Aussies in the lead, but you can see here there's a bit of a. Can you see my charts there? See the blue trend lines or the highlighted trend lines? These are the different Aussie pairs, but you can see there's a definite. It's not great, but it's started to roll over in all of these. This is the Aussie CAD, so these highs have been tripping lower for most of January. It's not significant, but it's generally drifted down compared to the big rally we've had up. It's starting to roll over. So here for Aussie CAD, I'll come to Aussie Kiwi in a minute, Leanne. But you see what I'm saying is, so big sell-off here on Friday. We're up a bit today, bouncing off the bottom of the Bollinger Band here and the 50-day moving average there. Same with the Aussie Swiss. I won't go to see that's more of a distinct move down. So Aussie Swiss went under its 20-day moving average here on the 24th from the break of the 20-day moving average here on the back in the middle of December. So strong rally we've had. Same here with the CAD. Strong rally up, now it's rolling over. Strong rally up, now it's rolling over. And this is the one you want to look at. This is the yen. This one here is the dollar yen. Big. This one's even more exaggerated. The run up has been huge. So the break of the 20-day moving average was first here at the beginning of November. So we've had November up, December up, most of January up, running out of steam up here at 80, 85, and it's just showing signs of weakness. And then finally was it Wednesday last week? Yeah, 27th last week. It broke the 20-day moving average, finally closing under it. Bounced Thursday, flat Friday, and then sort of flattish today because we're at a key level here. This is Aussie yen around that big psychological 80 level. So it's ran up, run out of steam, and started to roll over. So the one you wanted to look at, Leanne, is the Kiwi, and the Kiwi's done exactly the same. So both have been relatively well bid. Obviously, the Aussies started to perhaps weaken in anticipation of the RBA acting, but are very unlikely to anything of any significance tonight. To be honest, let's be honest. I mean, but it's a central bank. They don't like throwing surprises. No rate rises there, but we'll see what data's looking like. See what their outlook's like. We got Mr. Lowe, the Governor Lowe, also on the having a speech on with his press conference. We got the minutes later on as well in the week. So Aussie fairly on tap. That does. I've got another question from. Why? I have a question. Does not hold for that ACN account. No, is the short answer. But be careful about I'm not going to talk about other brokers, but understand the account that you're trading with. There's some misnomers around ECN accounts. ECN accounts are normally completely electronic. There's no anybody, nobody, or no trade desk, or nobody either side of that, or goes straight through the broker, straight into the open market. So just watch that when you're comparing accounts. Remember the other thing about brokers as well. It's the whole package, the whole support package. Do they support you? Are they fully regulated in different jurisdictions? Are they fully supported in your particular country? What sort of support do you get? If you need language support, what sort of support like these webinars, the education process. What's your account manager like? It's not just the actual account itself. Obviously, you want a broker that's you get good execution, you get good support, you get support in your language if you need it. A broker that's been in business for a long time, long history. What do other people think about the broker? So dig around, my friend Benji, and look into that as well. Okay, where was I? Leanne was asking about Aussie Kiwi. Sorry. So here on the daily, so again, it's the same sort of move. So again, as I've said, the Kiwi's been bid, Aussie's been bid. So here, but the Aussie's been sort of outbidding the Kiwi, if we like, here for December and into January. So here, we broke the 20-day moving average here on the beginning of December. big day here, the 9th. Broke the 50 days, well, then the 200 day. We sort of manoeuvred around 1.07. Remember, we talked about this a lot in December, didn't we? This 1.07 level. Then we breached it here into January. Then we pitched up. We got to 1.08, but then we've rolled over. Another one sort of come down. Nice fractal high put in there was first suggested we moving down. So for this continual move up for a week or so, 10 days or so, we've had another 10 days move down. And then we breached the 20-day moving average here on Christmas Day, the 25th. Sorry, 25th, Christmas Day, 25th of January. I'm in the wrong month. And then continue to move down. And a big sell-off here on Friday, again, as the Aussie weakened against many. But that, again, that's the end of month anticipation of the RBA to come. So big move down. And there we are, 106.35 on the daily time frame. So if we go down to the lower time frames, then you can see that's much more of an exaggerate a move down. So the 20-hour, also the 20 period moving average here on the 4-hour was breached here on the 20th of January. So a while ago, nice trend lower, flattened out here at the 200 period moving average. Couldn't break over the 200 period here for the 4-hour, and then 4-hour traders would have taken that lower. This, remember, the blue line is our daily trend line, and then we've continued to move significantly lower on Friday, and then we're sort of flattening at the moment at 106.35. So again, the trend moving down, and again, the 1 hour will be a bit more exaggerated if we zoom that in. But again, this is our daily trend line, bouncing off it here last week, Friday. Obviously, that's extending down there, and a big slide down, as we've just seen on Friday. End of the month, balanced up, and then we've gone sideways so far today on the 1 hour time frame, but we've put a low so far today for the Aussie Kiwi at 106.22, 21.6 really, but our top today is 106.41, and again, so that's generally edging down. We'll see what the RBA deliver tonight, but that move has happened quite significantly. Okay. Job's asking about Kiwi CAD. Thank you, Andrea. It's not to come up on here. Actually, so Job's asking about Kiwi CAD, and MHB is asking our overall view on the Kiwi. Well, like we've just seen about the Aussie, the Kiwi trend, they don't track each other directly in that sense at all, but they're obviously very closely related. They're both very closely dependent on what's going on in the Asia market, and particular China, big export market for both New Zealand and Australia. China. So as China comes out of the pandemic, better than many countries, obviously went into it first, dealt with it very aggressively. The Kiwi started to recover as well, but let's have a look at the Kiwi overall. Like we just looked at the Aussie, so and we'll come to Aussie CAD as well, Job, at the same time. Okay, I forgot about you. So that's the overall for the Aussie, and the Kiwi, as you're asking for here, guys, is in a similar state. Let's just bring these up. So Aussie CAD, Aussie Dollar. Let's get rid of that one. Let's get rid of that one. Pick that one up. Using so. Sorry about that. We'll come back to that one in a minute. Let's just see the time. So you can see this again. This is let's put the daily time frames of Kiwis again. Like the Aussies had a good run, but it's perhaps question mark: is it running out of steam? Has it turned around? Well, just go back. Right. So this is the daily for all these. But so same setup here. So generally, you can see here. So Aussie, Kiwi CAD trending higher, Kiwi Swiss trending higher, Kiwi Yen sort of trending higher, and the Kiwi Dollar itself trending higher. It may have rolled over a bit. Who knows? But it's sort of jiggling around its 20-day moving average at the moment, Kiwi against the dollar. But as far as against the CAD, it's still holding up. So we've rallied up. That was the last leg. That was the last big leg up. So October through to the end of November, we slipped down for December. Then we settled and held .90. Then we rallied into the end of December, into January, We dipped again, but again, we didn't go down to 90 this time. We were supported by the 50-day moving average. We didn't get to the 50-day moving average when we went to 90 that time. So interesting, the 50's come up, and we've bounced off that. We've down breached the 20-day moving average again on the 25th, and we're just holding that at the moment, so rallying up. So it's a quite a difficult one to call this on the daily time frame. It's sort of supported by the 50-day moving average quite strongly. The 20-day moving average in the middle of the Bollinger Band is there and still above the 50-day, so that's still aligned. However, they've flattened out. See the angle of the big rally here during November? We flattened out, it's up again. We pinched in here. See how the Bollinger Bands have pinched in as we moved down, supported at the 50 period. Then we moved up, but you can see now the Bollinger Bands now are starting to, they're narrowing, although they've obviously moved out, but they're narrowing and flattening, they're going sideways. So we've got a bit of a sideways action. So if we zoom this up, so what does that mean from here? Well, we've got this sort of great trend. It's not really a trend, is it? But that's our sort of down movement there from this high at the beginning of January, isn't it? So we need to really break over that level. Interestingly, we've retraced and rallied up there. So that last little, it's a little Fibonacci level you could put in there, couldn't you, from that high at the beginning of January to the middle of January here, this low where we went to 90.40, wasn't it? Yeah, 90.40, and then we've rallied. So we've rallied to that key level, that 61.8 of the Fibonacci level again for 1, 2, 3, 4, 5 days. We're literally pivoting through it. So the 61.8 retrace is holding so far. That's at 91.71. The pivot point today is 91.85, and then this pseudo trend line, I won't call it a trend line because it's it hasn't touched enough or anything, but that's really corresponding, isn't it, with our R1 level. So 92 becomes the key resistance. So Kiwi CAD needs to break over 92 if we're going to move back to the upside. And we've got support at the 20-day moving average, which sits at 91.46 or 91.47, which is also where our S1 is just above that today. And that's also the daily 20-day moving average is also the 50% retracement of this last leg down, this last move down, and then we moved up. It's too early to say that this is rolled over yet, but we're pivoting through the key 61.8. So to answer your request, Job, about who's asking about? Job, yeah, that's about Kiwi CAD. It's to the upside. I wanted to find out which currency pairs are good for beginners with low spread. Job, the tightest spreads are the most liquid markets. So that's the big majors. So that's the dollar crosses, okay? Just because the euro dollar, for instance, usually euro dollar is an example. Just because the euro dollar might have the tightest spread doesn't necessarily be the best for beginners. Why do I say? Well, the best is a bit of anathema. You want to trade something that fits your personality first. So don't worry about all assets move. They go up, they go down, they go sideways. Some have wider spreads, some have tighter spreads. Some have more liquidity, some have less liquidity. So if you're worrying about if you're looking at a tighter spread, you want to be the deepest liquidity, which is the big dollar majors. And they're the safest to trade because there will be more. There's more competition for buys and sellers. There's more banks offering prices for that. So stick to the majors to understand what's going on. But that's what you got to do first and foremost. Understand what you're doing first and foremost. Okay, so stick with the majors when you first have a look at. When you're a beginner, but don't be afraid to stick with your demo account till you're comfortable with trading something that fits your personality, fits the time frame. Have a strategy. More importantly, understand that as a beginner, make sure before you risk any money, Job, make sure you understand what the spread means. Make sure you understand what margin means, what leverage means, how leverage can be work for you as well as against you. And make sure you understand the asset you're actually trading, because obviously different assets have different spreads and different assets have different how much they can move in a particular day. So do watch that. So where was I? I was New Zealand CAD. When pound Swissy on the daily and weekly currently long, but the trend looks to be shifting to the downside from my side of the charts. Can you perhaps provide some clarity, says Waynard. Interesting, Waynard. The sterling Swissy is the biggest mover today to the upside. It's up over 0.5%, 0.6 of 1%. Let's just bring the sterling crosses up. But that's today. So we're looking at daily and weekly. Again, one of the benefits of having them all like this is the sterling cross. You can see generally, pound Aussie is up, pound CAD's up, pound Swiss, which we'll come to in a minute, is up. Pound yen is up. So that's that's the feel. Pound Kiwi's less so. That's flattening out, isn't it? Dollar flattening out a wee bit on there, but weekly is very, very strong. That's cable strong. But pound Swissy, what do you say, Wayne? Daily and weekly. Well, daily, very interestingly, we got the 200-day and the 50-day. The 50-day just crossed the 200-day there. Generally seen as a bullish signal. That happened about a week or so ago. The 20-day, the 20 moving average is there, so that's aligned. We've got the 20, the 50, and the 200. So they're all aligned positively to the upside. We're broken higher again. So our recent high was through here, where that 61 Fibonacci level is there from this going all the way back here to end of August. So that was a high there. That was a high we spiked to intraday, not the end of day here in bringing us to November. And today, we've breached that. Friday, we breached it again today. Is it overbought? You would obviously the next argument, or are we breaking out? Well, let's zoom in a bit here. You could argue that is potentially breaking out. So that's 1, 2, 3, 4 levels there. That 61.8 there, if you can see that one. And we're breaking out of that. You could argue it's a bit too early to say that that's a breakout, but certainly the moving averages are aligned higher. It's a strong day today. It is the first trading day of the new month. Obviously, there's always a bit of messing about going on the first day. The Swissy has been quite strong. The Swiss National Bank, notorious for intervening. Sterling getting a bid ahead of the Bank of England on Thursday. Who knows? But, as a day trader or an end of day trader, that for me, the key day, looking at this chart here, Wayne, would have been that day there, the 12th of January. Why do I say that? Because it's broken over those highs there. It's a big, strong candle. We're over the 20-day, we're over the 200-day, and we're over the 50-day. So my psyche would have taken me long here on the 12th, and I'm still long, basically, or I would be still long if I was trading that. That would be a long position from there. So that's positive. What was your comment? Currently long, good, okay, but the trend looks to be shifting to the downside. I can't really see that a trend shift to the downside here on the daily time frame because the MACD is still positive. There's a possible sign of that. I see what you're saying. Okay, so this oscillator here, this is the stochastic at 533, so it's pretty spiky 533, but it's still not overbought, but it's approaching there, so maybe. We've just seen we've broken over those 3 or 4 highs, so we may be getting stretched today. It's only one day, and obviously today isn't finished, so we can't make any analysis on today's candle. But the RSI has still got 65 and rising. But I wouldn't get too worried about that yet, is what I would say. Obviously, and the weekly, I guess, would still be really fairly punchy. Yes, so there you go. That's the weekly. That still looks punchy to me. That's over that's that 12th of December week. This one hung around at the 50, broke the 50 here. That coincides with that 12th of January day there that week there. So for 1, 2, 3, and into a 4th week now, it's to the upside. So that's still looking relatively punchy. I don't know where that yellow line's come from. That's where would that take us? That's Fibonacci level we breached. On the weekly is there, and then the next week would be here for me, is what I'm seeing here, taking us back to the March hiatus as we came down, so obviously gapping all over the place. So next level up would be 123, and then obviously the psychological 123.75 to the bottom of that week, and possibly 125 before we get to the 200-week moving average, which sits at 126. So that's still pokey. I wouldn't get too. Just watch it. If you're long, I don't know what your entry and exit levels are required. Wayne had, but that still looks okay to me. I'd say on that. All right, sorry. Right, sorry. That was Kiwi. We were talking about the Kiwi. Johan was also asking about the Kiwi, but it was a Kiwi Dollar. No, I'm back in sterling, aren't I? Sorry, Kiwi Dollar was the next one. Just got these Kiwi crosses. Kiwi's lots of interest in the Kiwi. Let's just look at this one first. So Kiwi here on this setup. Again, relatively strong, big run, a big long rally from this congestion down here in October and November. Huge rally, 66, 67, 69, and it's been following 72, 73, all the way up here. We went to 73 at the beginning of the month. We've come back down now, and now we're sort of congesting here, but sort of perhaps has rolled over. So again, a bit like that's a bit more perhaps definite there for the dollar coming back to a bit of strength. Interesting, the CFTC, the futures market on Friday, still showed the market generally short the dollar, but sort of trimmed. Not a great deal of trimming that last week, but certainly they trimmed the shorts, and that's sort of corresponding with this sort of bit of a tick up so far. But it's it's the end of month, beginning of month. If I just put the markers on there. So again, sort of generally drifted lower from the high earlier beginning of January. Again, MACD sort of generally shifting low. So that is trending to the downside. 71 to be tested, undoubtedly, because that's our floor here during January down here, 71. So that's a key level. So that holds. We may move back up, but if that breaks, that's the 50-day moving average here as well, Johan, and the bottom of the Bollinger Band. So we could break, and then 70 and 69, because as we moved up, there was very little resistance to moving up. And so it could be on the way down. So 71 is the next line in the standard support for the Kiwi dollar on the higher time frames. Euro pound. Let's have a look. See if there's any more questions here. Wow, that's so slow. Thank you, Andrew. Euro pound. Sorry. Again, another one that rolled over quite significantly as the. Actually, let's go back to my intraday setup. Is this strategy good for stocks? MHB is asking. We'll come to that. I'll come to your question in a minute. I'm getting daily 50 plus pips with this strategy. Which strategy are you talking about, Joe? Where are we? Why does it take me to that one? Who knows? That's why, right. Euro pound. Who's asking about euro pound? It was Captain Dizzy. Daily, you can see it's been a big mover down. This is the daily time frame for euro pound. January was why isn't there? There we are. 30th. There we go. So big move down here under 90, and we've been under 90 all of January. Slipped down under 88.50 late last week, and poking lower again this morning to test 88. So trend remains very much to the downside on the daily time frame. The 1 hour much more choppy, much more action going on, and the 4 hour again. So that's with the daily trending lower. So is this support of 88 going to hold? Well, let's go back to the daily time frame. You can see, that just, who knows? We spiked to it, the key level was this 88.50 really from last week, and we're weaker today. So sterling certainly in demand. Say today, say most biggest move has been against the Swissy, but it's also obviously an impact on the euro. And big bounce though from 88 here, as you can see on this 1 hour time frame. So trended lower. That's been lowering. You've been short all of that all morning. Then a nice all the way to S2. But then it's recovered all of that big gap down. You still made, if you've been trading that, you still made some pips on that following that break of that. But that's now looking to trying to go long. Will we get back to the pivot point today, 88.50? Who knows? It's been quite a volatile day, hasn't it? I say the PMIs out of Europe were the individual countries. Some of them were better than expected. The overall for Euro was flat. We had that political fallout over the vaccines and AstraZeneca last week. The EU got a bit ham-fisted, a bit over the top. UK responded quite guardedly, I thought. But anyway, S1 88.30 and then 88.50 to the upside for Euro. Sterling today. Will we test 88 again today? Probably, possibly not, as we've already tested it for 1, 2, 3, 4, 5 hours and bounced off it. But who knows? Anything's possible in the Forex market. But generally up to the upside. The daily traders, the 4-hour traders are still short because that just keeps moving lower. We've bounced today, but that 20 period moving average for the 4 hours sits at 88.40 to break, move back up, but the highs still getting lower and the lows are getting lower. And the daily end of day traders, they've been short initially from this here. They got turned around, but again another trend line you can see sort of moving down, and they've certainly been short from the rejection of the 20 to move up there. And technically from about there, the 8th of January. So again, that one's moving short. MHB. Is this strategy good for stocks too? I'm getting daily 50 plus pips with this strategy. I don't know what strategy you're talking about, but if you're talking about this crossing strategy, that's fine. Yeah, yes. Yes, try it. The exact same strategy can work very, very different for different traders because we're all different. Lots of people, say they follow the rules. They don't follow the rules. They have a different approach. They get in too early. They get out too early. So you apply it for your strategy, my friend, okay? All the way. 88 on 13, bro. I don't know what you're talking about now. Thank you, my friend. That's all right, Captain. 88 on 13. Okay. Let's have a look. It's Facebook. Any more questions? Because mine are really late for some reason. I can't see them all. Comments. Can't see all the comments. Benji's what is a zero spread? Benji's estimate. What is a zero spread account for Forex? Benji, go to the Benji. I don't know if you're still here. I've just seen your question here from quite a while ago. Go to the our website and check out the details of what the different accounts mean. Okay, zero spread is that, or from zero spread. Obviously, it's not zero. It's not zero all the time, and there's obviously a commission on that as well. But if that's the tight, they offer you the tightest spread certainly. Okay, no more Facebook questions by looks of things. So everybody's lots of questions coming in on YouTube here. Who was next? Did we do all the Kiwi ones? I think we did. Imran, hello, my friend. How are you? I haven't heard from you for a while. Hope you're well. Aussie Kiwi, we did. Nazir, hello. Captain, that's saying thank you. That's not a problem. That's what we're here for. Okay, right. Let me just go back to my. So say we've got say the. This plane? That's still the one we talked about before, weren't we? So let's get rid of that. So generally, we've got this dollar's been relatively bid today. So the dollar yen managed to break 105. It hasn't yet. Where are we? It's half an hour before open. Other news today that caught my eye. Tesla got an upgrade again today to $1,200 from who was it? It was not Piper Jeffries, it was not Piper Jeffries, it's another broker, but $1,200 their target price. Shanghai First upgraded them to $980, I think it was. They closed at 820. They're trading at 820 pre-market. They were down 5% on Friday's close, as well as I said before, as well a lot of markets. Big shakeout in the equity markets. I don't know if anybody's trading the equity markets. Lots of people ask about the Nasdaq 100 quite often. But certainly it was a big shakeout for that. Somebody did ask about oil. Hello, my friend. Euro, what time frame, Samasku? Because it's had a bit of a battering today. We've Euro. It was literally, it's been pivoting through 121 for a while. Here last week, Thursday, we went down to it on Wednesday from 121.65. That was a key sort of previous pivot area into the big psychological 121. Thursday, ran off it on Friday, but couldn't get back to this 121.65. So we ended up closing under the 200-hour moving average into the close on Friday. Weaker today, sideways, and then big sell-off this morning after the German retail sales figures came in really woefully below expectations. Came in at minus 9.1% this morning. The PMIs, the manufacturing PMIs, were a wee bit better, and it stalled the floor. But as you can see, we've collapsed into 120.75, breached the key 121.00 level, and today we've tested down to S2 at 120.66, really actual low. So that's again that low that we already tested last week on Wednesday, and the Wednesday low took us all the way down to 120.57. So they're the low areas. So the S2 there at 120.65, which we seem to have bounced off so far today, ahead of the US Open. Then there's that Wednesday low from last week that might come into play at 120.57.5. And then S3 today is sitting much lower at 120.40. So they're the three levels below. To go back up, we need to break the S1 and the psychological 121.00. Then there's the 50-hour moving average at 121.18. And today's pivot point at 121.28 for euro dollar intraday. Simsco, my friend. But if we look at the higher time frames, the daily time frame, it had a nice strong rally, hadn't we? November, December. Again, another one rolled over in January, dipped down into this 121 level here. That's that big yellow line. And we're sort of, as far as the end of day trades concerned, we're sort of bouncing off this 121 level. Been under it, closed under it for 1 day, 2 days, and then back over it. Been over it. And here we are at the moment, first day of the new month, under the 121. But obviously, again, you can't do any analysis on that candle here. And why can't we do any analysis on that candle there? Today's candle? Because today isn't closed. Exactly, my friends. Libong, I'm from Lesotho. Sterling cable on the 1 hour time frame. Well, it's had a bit of a shakeout on the 1 hour time frame, my friend. So we've just done euro. There's a question coming from Facebook, which I can't put on the question box here. And I'll come to you for dollar CAD, my friend, in a minute. If I put your question up. So let's look at Labour Hand, I'll come to you in a minute, okay? So I'm not looking at the camera. I'll come to you in a minute on Facebook because there's a guy here asking about dollar CAD, and I'll put his question up, okay? So, Andil, we'll have a look at dollar CAD. And again, I don't know what time frame you're looking at, but if we go to the day, let's start with the daily time frame. Dollar CAD is, huge downtrend. All the way from 134 here at the end of September. So October was down, November was down, December was down, and January, we finally looks like we may have found a floor. Although, if we zoom this in for January, you see we touched and tested under 126. So for 134 over here, sort of the end of summer, beginning in the autumn, consecutive months down, consecutive weeks down. that low there, that 125.87, 125.87, that was a 33-month low for dollar CAD. We've moved off there into the end of January, and we've recovered 127, and we're also now pivoting through 128. So 128 is our pivot area on the daily time frame for dollar CAD and deal. As far as moving high is concerned, you can see how the Bollinger Band is starting to move up. So we've moved down. As you can see how we've moved down. Here's how they've pinched in. Then we've moved down. We went sideways, but generally we were edging lower, weren't we? And then it started to flat out. See how the top of it's flattened there, bottom of it's flattened here. So we're going sideways now. So the trend has stalled like it did here as we're moving down, and it's flattened out. So we're just going sideways from generally January in balance, because we tended to trend lower, and then for that final week or so we moved up from this 125.87 low. So but to move higher, we really want to hold and move above 128, break, move another 100 pips to 129, and that will see to this downtrend well and truly over. So at the moment it's a bit of a retrace, but we haven't, you couldn't put a little Fibonacci level on because you don't know that level moved up has happened. Has this end happened? Well, possibly, but if we zoom in again, move out, I should say. It wasn't just, the downtrend's been going on for months. This is all the way back in April. Remember March? So it's down in legs, admittedly, but the trend remains down. So possibly, who knows? It's a 33-month low. It's a big low, big long downtrend. Is it over? Well, possibly, because we've had 1, 2, 3, 4, 5, 6 days now turned over. We're over the 20 days. So again, shorter time frames would have gone long here into the end of the month on the 27th. Big strong candle engulfing all this action again, ran into 28. So we're long from 128 and still sort of holding up at the moment. But as it didn't get to 129. But the ATR on the daily time frame for dollar CAD is about 96 pips. So you'd have got more or less one ATR on that move. So you might have been in and out of that, but it's still holding up. We zoom this up here on the daily time frame. In fact, the cross happened there. In fact, we would have gone long. This strategy would have triggered long actually there earlier on the 25th. Our stop loss would have been down there, so that doesn't help. Wouldn't have worried us. We're still long, and our stop loss is still down there. So that's that crossing daily time frame is still long on that one. A deal, okay. Labong, I'll come to your cable request on the 1 hour in a minute. Adil, if you want a closer inspection of the lower time frames, let me know. But as you can see, so daily still relatively long. 4 hour is long. But again, the 4 hours run out of steam round through there, hasn't it? On Friday. And last week, 128.68, also 128.70 we couldn't get to and break, but again it's sort of bounced off that 200 hour, so 4 hours still longish, and the 1 hour CAD traders short, and they went long. That would have triggered a long there this morning at 11 o'clock, and that's it's not great, but it's moved up. The ATR is about 18 pips for 1 hour on that, and has it already moved 18 pips? Yeah, 15 and a bit, not quite. But that remains relatively long. Right, let me just do Sterling. Somebody asked about Sterling over on Facebook. I can't put his question up because I can't share Facebook for some reason. And we've got those most chat issues up. So 1 hour, it's been very weak. That would have gone short on this crossing strategy here, my friend. That would have gone short this morning, earlier. I think I said this earlier, didn't I, Lebon? I don't know if it's still here. At 1 o'clock. So that's gone short there, just as the 5 and the 9 moving average have crossed. We're under the 20. I mean, it's not a great short. It's just right on the 20 period. And probably when that triggered, it probably didn't actually probably break the 20-hour moving average, to be honest. But technically, it's still short there, and it's had a nice run down there for 40 odd pips from 137 17 all the way down to 136.75. So that's still short there on that 1 hour. It's under the 1 hour 200 period moving average. You can see it's almost under that, but continues to move down. Next low below that would be, it's had a strong move today already, 100 pip plus from that 136 we were talking earlier to 136.50. That's the support area there. We talked about that in the earlier time frame. So we talked about that earlier, Adil. Le Bon, my friend. John, we looked at pound Swiss a minute ago. Salah will look at gold as well. But let's have a look. Where are we? Let's just go through these. Who was next? Next was actually MHB asking about the Aussie Swiss. Aussie Swiss, I think, is good for sell retracement completed on daily. As we said up before about the Aussie, it seems to have rolled over. So you're saying it's sell retracement on the daily. Yeah, well, that's what I think I said before, didn't I? I've been looking at the Aussie. And those little trend lines we put on over the on Friday or over the week. I can't remember when I did it, but you can see. So Aussie, yeah, I mean, that's a nice run up, run, retrace, run, and now, is it a retrace? It certainly is retracing. It's broken the 20-day moving average there on the 24th. It did it again, more significant closing, lower than it did, having moved back up, but still bounced into that trend line. So that's reinforcing that down trend line, and then we've come back up today. So again, we need to continue lower, we need to break under .68 MHB, and that support there is the 50-day moving average there at 60.6758. But we need to break back over the 20-day moving average and our down trend line now, which is becoming more significant at 68.50 as well. So yeah, that's looking like that's moving down certainly. Doji coin, Clyde, I haven't got Doji. Can't show you Doji coin. Obviously, that was ramped. It got a lot of action. Let's put it like that. It got a lot of action, a lot of interest on Friday. That's continued today. Obviously, Mr. Musk has come out as well, talked up Bitcoin, talked up cryptocurrencies generally, talked up Bitcoin in particular. So again, see where that one goes. Next one is coming from Facebook from Arjun, is asking about the pound Swiss, and then Frida here is asking about the pound against the Aussie pound. So pound Swiss and pound Aussie. So let's have a look at the pound crosses. So actually, Frida, if you don't mind, I'll take yours off, and I'll just put a deal, and because I'm going to show the guy from Facebook who asked about the pound Swiss first, if you don't mind. And then I'll put yours up when we get to British pound. There we are. What's this? Pound Swiss. Arjun, pound Swiss. We talked about this before. I don't know. This is the weekly one. For some reason, this chart's up, so perhaps we have already talked about it. I forget. They're all just assets to move. So if we zoom this in, wasn't it? We talked about this for Wayland, didn't we? Pound Swiss, I think, didn't we? Didn't I? Hang on a minute. Let's just have a look. Yeah, pound Swiss. We just talked about this. Arjun, if you weren't here, let me know if you missed it, because I've just talked about it with Wayland before. Basically, this looks really strong on the weekly. The daily remains very pokey. We've broken over. We've broken over these key levels. It's too early to say it's a breakout. It's first trading day of the month, but as you can see, it's broken some key levels here. See this 61.8 fib level from way back when. That was still a significant resistance level. This is even when we go to November, January, we test it, and we've broken over there. So it looks like it's positive daily, maybe rolling over. Some negative, some talk of it being overbought here. As you can see, this is the daily stochastics potentially getting overbought. The MACD still looks fairly positive, but running out of steam. There's no divergence. You can see, we can't really see any, although the that's still moving up. We're still moving. That's still trending high. And we've got the 250 and the 20-day. We had that 50 period cross, 20 period, 50 period crossing the Sorry, what cameras I'm looking at. 50 period crossing the 200 period here on the daily time frame. That's a positive bullish sign and continue to move up. So we've broken this area here. So that's moving up. So Arjun, if you want some more details, have a look, watch it later, but we did look at that. Salah will come to gold in a minute. Aussie Swiss, somebody else asked about Aussie Swiss, wasn't it? We did Aussie Swiss. Sorry, I'm getting all mixed up here with all these questions going on. And then Frida was pound as the pound Aussie. Okay, so pound Aussie, bullish, positive, as lots of sterling crosses have been. So here into the year end, here doom and gloom. We were down here under 175, 174. 27, some negative candles put in there, but it's all to do with the fundamentals were driving this. And then we recovered. We had a tentative break of the 20-day moving average here in the middle of January, sideways, and then we broke forward 3 or 4 days later and tested under it again. So that was another new high from the down leg. So it looks like we're moving up. We wanted to break this cluster here, which we did a couple of days later again, and the 50-day moving average. So another continuation of the trend there. Big day there, the 27th. We ran into the end, and then we followed through so far. So that's from the initial break back here on the 18th. That's still long, hasn't retraced to stop you out at all. You've trailed your stop loss up. That's still going quite nicely. Obviously, 1.800 is the next line in the sand. Looks like we've tested that today. Is that correct? I've got 4 hour. Yeah, earlier today we tested that 180, rolled off it for now. But again, you see the 4 hour still remains relatively strong. And again, the break of the, it goes further, zoom in, 20 period moving average down the 4 hour takes you all the way back to, if you've been, you could have been in and out as that's dipped under, but the 50 period is held fairly confidently. So that was your next break there, the end of the 21st, and since then we haven't looked back. So 20 has crossed the 200 again. Another one that's on this. This is the 4 hour for the sterling Oz, but the same sort chart pattern. And we looked on that daily time frame. So here we got the 20 period, the 50 period, and the 200 period all nicely aligned. The 50 period now has crossed over the 200 period. That's a positive bullish sign, having dipped down. So we retraced a wee bit, held 178.50, and then the big strong day here, 27th, 29th, so it's 4 hours, isn't it? The end of the 29th, and it's gapped up today. There you go. So that's resistance 179.70, and then we really want to break that 180 on the 4 hour Frida. I don't know what time frame you're trading it, Frida, my friend. But as I say, the daily is relatively bullish from those lines we put in earlier. 4 hour therefore is also trending up. We've dipped a bit, and the 1 hour today has been a bit more sort of showing the resistance we've got to as we got. So Thursday high wasn't Friday's high. We moved higher on open today. Briefly spiked 180. Got some shorters in there. Moved down. Had another go at 180. But interestingly, we were lower than we were at the beginning of the week and the month this morning, and then we've drifted down since, and now that's gone short-ish under the 20-hour moving average, with support at the 50-hour moving average at 179.18 today, and then the pivot point 179.014. That's the support. For this to go back to the north, we need to break 179.55 and then 179.72 over the R1 level to take that further north on the 1 hour time frame. Frida, I don't know what time frame you're trading, but that's the 1 hour time frame. And finally, Salah, not finally, but Salah's asked about gold over on Facebook. So you might see any more questions. I've got some. We saying inbox me, join hot Forex. I can't argue with that. Salah asking about gold. And I said earlier at the beginning that how long I've been talking for an hour or so now. At the beginning of the session, we talked about Gold, a little bit, on the higher time frame, certainly sort of moving down, but a little bit directionless, to be honest. What am I looking for? Let's look at the commodities, because we'll see the great leap we've had in silver. So this is the commodity setup, and gold on the daily. So as you can see, to zoom in is what I want to do. So some big significant days for the gold market, but this is the daily time frame on this. So you see, it's not right, is it? There we go. So some big movements down. There we can see it a bit more clearly now. This is the that level I was talking about earlier. So from our lows down here, 1780, at the beginning of this. Cursor gone. Lost my cursor. So from the lows at this 1780 area, or we went even as lower than that, didn't we? 1765 at the end of November, beginning of December here. We've sort of rallied off that low. However, the 200-day moving average now sits around this 1810. I think this is the exponential moving average. Simple. Is that a simple one? I think it might be. Yeah, it's a simple one. So an end of day trader or key support is the 200-day moving average. My cursor's disappeared again. Sorry, guys. There we are. So it's this level here, and this is what I was talking about before. It's a bit clearer on this chart than the other chart I was looking at. So this the 200-day moving average has been tested twice in January, which is relatively significant. It was here at the beginning on the 11th, and we did it and breached it. Admittedly, only intraday. On the 18th as well, and then we bounced off that. But what we can't do is break over the 50-day moving average. Okay, our 50-day moving average sits around there about 1865 on an end-of-day basis. So we ran into it and then bounced down. However, the lows that we put in at the end of January were higher than the lows we put in at the middle and beginning of January. So that's relatively okay. For gold bulls, but that big strong candle looked like it was a big positive. I zoom this up. Looked like Friday was going to be a big strong day, but this is how we closed. Big strong wick, rejecting the 50-day moving average again, rejecting the 20-day moving average. Parabolic SARS remained negative all that time. We got very, very close to it intraday on Friday. We're touching it again today, so it hasn't flipped. We're still short. And that key level where we are now, 1865, that 50-day moving average, needs to break, and we need to hold over that if that's then going to start moving, tracking north again. If not, we're still relatively capped by that level, but supported by the 1815 level. So a key, quite a big gap there, obviously 1865 to 1850, that's a $50 range, huge pit number range there on the daily time frame, Salah. But generally edging, a bit directionless, but sort of overall sort of negative. We go to the weekly chart, might be a bit clearer. You can see that, if I zoom that up a bit, you can see on the weekly chart, it's generally, isn't it? It's still biased to the downside. The weekly, we've been under the weekly 20-period moving average from a brief sojourn back over it, having tested under it and over it. Now we broke under it here at the beginning of November, and since then, we haven't been able to close above the 20-week moving average. So for 12 weeks now, we've been under that key 20, and you can see how come that here. And if we zoom this up a bit, I can't zoom it up anymore. But you can see on the weekly time frame that 20-week is sitting up there above our 1865. We talk about on the daily time frame, sitting up there around 1870, 1875 for the weekly to break and close above the 20-week moving average. So again, biased really the higher time frame to the downside. The monthly, for the sake of, again, that looks like, falling down. But again, you see that big support there, 1880, 1875 on the monthly time frame, taking us back to the high here in the summer as we approach $20,000, $2,000, didn't we? So there we go. Bit directionless daily, but perhaps airing to the upside with the support with the 200 day. Salah. So I like to follow your strategy, and I believe that the best strategy I have seen for a 5 in the middle boundary, but failing to break the R1 and previous day high. Okay, all right. Well, if that's how you want to you trade that, certainly. Let's have a look at that setup you just talked about. I haven't got it. I have to go back to the daily one. Talk you through that. So. As I say to everybody, there's hundreds of strategies out there. Most of them are quite good. Most of them work. We've talked about lots and lots of them as well. We haven't talked about hundreds of strategies, really, but there are hundreds, if not thousands, of strategies out there. It's the application of the strategy and you making it work for you or not work for you. That's the thing. Always, always, always the case. So what Salah's written here on Facebook, unfortunately, I can't share it on with us here live because I can't share my Facebook comments. But he's saying he's using the 5 and the 9 in the middle Bollinger Band. This is what this setup is here he's talking about. Let's go to gold, the asset he was talking about. Where we are, gold here. So this is the blue and the yellow line. That's the 5 and the 9 exponential moving averages. The middle line of the Bollinger Band is the 20 period. It's a simple moving average, but it's still a moving average. And you're mixing exponential and simple moving average. But say shouldn't do that sort of thing. Anyway, forget about that. It's just the way this is. So what Salah's saying is, he likes that. He's gone long here as this has crossed this morning. He might have even got later in here on the gold chart this morning. So it sounds like he's saying he went long this morning here very early. It was a big candle, taking all that out. And then he's rallied it, or he's held it. As that's crossed there, he sort of saw the R1 as a resistance. And that's exactly what these R's and these S's are. They're resistance and support levels. So we ran to it, but we couldn't close above it, and it closed quite significantly below it. And so it rejected it then, no way there. And then the last few hours, it's tested it again and over it, but not closed it. Tested it, interestingly, tested it. It's having another go now. So, but the actual body of the candles are getting smaller. Obviously, we can, again, remember, this candle is yet to complete, so we can't do any analysis on the current candle. But what is the last 3 candles telling us? Well, we were up, down, and then up again, but the bodies of the candles are getting smaller, so the power to move up from this big jerk at the beginning of the day and follow through earlier this morning, and then again here, is running out of steam, you would argue. See, big one here, then it cooled a bit, then another leg up. So are we waiting to break? But certainly, as Salah's just pointed out, that significant R1 level is our big resistance today. And obviously, that, as he said, that break here was over. This is our big support here, is that 200-hour moving average, is also the 50. So again, as time moves on, you can see the 50-hour here coming to cross from below above the red line now, which is the 200-hour moving average. So again, would be relatively positive if it happened. We've got all this action going on. We don't know what's going to happen. You can run to it and then move away. But also there's resistance, if you like, the pivot point today, 1853.90. It needs to break as well. All these moving averages need to break above that to show positivity. Okay, so anyway, yeah, you're absolutely right. Salah, nailed it, my friend. Don't forget to hide the previous comments. Yes, sorry, Frida. Sorry, it's just I'm talking about gold, and I've got pound Aussie on there from Frida before. So let me just get these, because these. Frida says thank you. I trade 1 hour time frame. Okay, Frida. Might have a look. What were you asking about, Frida? I can't remember. Please do daily analysis like you do a year ago. Maybe I have to request top Forex broker. I think you're talking about the daily little chart thing I did. Yeah. It was getting quite time consuming doing it manually, but it's sort of what I was doing with the Aussie there, MHB. My friend, that's what pointed all that out. But it's worth certainly. Again, it's what the time frame that you do it, trader. Lakvinda, hello, my friend. This is a good strategy. I usually open platform before European Open and put 2 to 3 trades if I got, and then open platform before New York Open, put 2 to 3 trades and close market, give stop loss, etc. Again, I don't. MHP and everybody else, trade the strategy, trade the time frame that fits your personality. Lots of people haven't got time to sit and stare at the charts all day. They've got another job. They're at university, or they're studying, or they're traveling, or obviously not traveling at the moment, but doing whatever it is with their rest of their life. Some people like to sit and stare at the screens all day, you know, trading all the time. You know, that's pros and cons. And again, trading in different time frames. Lots of people, you know, happy to be scalpers and just trade a very intense 30-minute session in and out for a few pips, but many, many times. Other people, you know, not interested, only want to come in and check the 4-hour candle, so they're only interested in looking at the charts, you know, 3 or 4 times a day. You've got to do what fits you, fits your personality, and fits your time frame and your lifestyle, but more importantly, your psychology, your physiology, how you are set up, my friend. Okay, so yeah, I was. Yes, I see. We were doing that before, weren't we? Frida, Frida? Do we actually look at your? Let me just check what you asked for, Frida. Pound. I don't know if we looked at the pound frame, Frida. Did I? Just a quick dip back to what, because you've actually asked about the time frame, weren't you? 1 hour time frame for pound Aussie profiles. Oh, that's the wrong one. Oh, it should be on here. This is the Aussie set. So remember, as I said before, these are the 4 where we have the Aussie as the lead currency here. So you see it's rolled over, rolled over, rolled over, rolled over. And I've got the Aussie. I have got the pound Aussie here as well. So pound Aussie on this setup, again, has rejected that 180 here on the pound, and that's gone, again, that's this particular, you know, it's gone short there. Well, it's gone under the 50-hour, we don't know, but that's certainly gone under its 20-hour moving average. And I think this setup there is the different. Yeah, this is the crossing EMA strategy one. So this one on the 1 hour, that would have gone short then and down. Went long there, but ran out of steam. It's gone short there. That ran down quite nicely. Then it's gone long. So this was last long. Looks like it's long. So we went long. This would have gone long here on the 29th, Frida, here on this 1 hour time frame. Rally on Friday, gap quite nicely. Gone under the 9 period there, so you'd have closed it out. But again, you could have gone long again there if you'd been a bit aggressive with this. But into the 180, but you'd perhaps taken your profit there at the end of the day. If you'd left that open over the weekend, you went to 180, got sharped out. But then this is now looking to go short. Basically, if you follow the rules, that last hour that closed 37 minutes ago, certainly closed out your long positions from Friday. Is it going to move down? It's actually too early to tell, but that's generally still ticking up. What's the 4 hour doing? 4 hour is still big, really. The 4 hour is still positive, and the daily is still certainly positive. So that short there and that 1 hour is very much against the trend. A bit like we had a move down there, we had a move down there. They were fairly successful move down. Is this one going to be fairly successful against the trend move up? So, as I say, so that's the trade there, Frida. I don't know. I don't know what you're trading. Yeah. MHP's comment here about opening. What's he say? Open platform before Europe Open, ducks 2 and 3 on. And he does the same for the New York Open. Remember, when you're trading Forex, guys, it's an over-the-counter market. It's not, you don't have to wait for the actual, London to open and New York to open. But that is still a key time, because that's when the exchange is open. That's when the futures market's open, the options market's open, the real cash equity market's open. So it's still a very, very significant thing. Obviously, when you're looking at the Forex market, like here, you can't necessarily see, there's no gap or anything as the market opens. But if you put the times in of the opening of London and New York, you will see, tends to be bigger, significant candles because of the amount of liquidity coming into the market, the amount of market participants turning up. So as MHB's put here, he sort of tries to, I don't know, guessing, but open before the market opens. It's, you've got to be careful as well about that as well. Wait till, sometimes it's better to perhaps wait till a market that has actually opened and settled down about to see what its direction is for the day. But if you're interested in trading those sort of things, I've got a webinar later. I think is it this week? I think it is on Wednesday, where we look at gaps, trading gaps, and how to trade gaps. So it's one that comes in Somebody's just about joining us. Somebody's asking about joining us. Okay, yeah, that was from ages ago. Oh no, it's actually, I'm looking at the Facebook page now, it's actually live. So there we go, Pound Oz. Right, if there's no more questions, let me check if there's any more news today. So the PMIs were generally positive out of Europe, certainly a big beat for the UK one. It came in at 54.1 as compared to 52.9 last time. Probably the highlight of the news today was that big miss this morning for German retail sales for December. See, I can't multitask, I can't talk and fiddle with my charts at the same time. So German retail sales came in at negative 9.9%, 9.6%, a huge miss. And November went negative as well. It's supposed to be positive, but it was expected to be minus 2%, minus 9.1%. 9.6% is a big miss, and that's why we had that big shakeout this morning on euro here as that news broke in Germany. We've bounced off that and say that 120.75 and up a tad, but we can't get back over 121 the euro. We have it's 20 minutes to the US. The big data of the day is the US manufacturing PMIs. The ISM PMI is expected to slip to 60, still better than Europe and the UK. But it was 60.7 in November, expected to slip to 60. So see if that comes in better than I expected. Or around expectation, be relatively positive for the dollar. Dollar's having a good day so far. So euro's been down to 120.75. Dollar yen has been to test 105. I haven't actually got there. Zoom up. You see, we've breached, interestingly, we've breached Friday's high at 104.94. So we've got, whilst I've been here talking to you guys, we've got as high as 105.96. So again, testing R1. So again, relatively big. Interesting, if we look at the weekly, that's caught my eye at the weekend, the dollar yen chart. It's a bit messy, obviously. But, you know, from this big downtrend we've had all year, basically, from the hiatus of obviously March when we went down to 101.25 and then we bounced, you know, back to 112. We've been trending lower. This is the weekly time frame. This takes us back to beginning of last year, but moved down. So on Friday, I mean, it's obviously, again, it's the end of the month close out, but we did for the strong week, closing over the 20 period moving average for the first time since we did it back at the end of May. Again, it's the end of the month syndrome. The next week, we'd reversed all of that and continued the downturn. So will we do the same again this week? Who knows? Because obviously it's only day one of a 5-day trading week. So see where the dollar, interesting to see if we can hold the 20 period moving average on the weekly time frame there. But certainly it's had a strong few days. Dollar yen breaching 104. We were literally pivoting through that for days and days, not doing very much, and strong week. And so far, a strong day for dollar yen. So see what the PMI data is like later on today. Right, I am going to wrap up unless there's any more questions. MHPs. Forex gets confused me a lot. Yes, I think it is Wednesday, the webinar. Yeah, there's 4 ways of trading it. Gaps on Forex, MHP, my friend, be careful, okay? That's all I'm going to say, because, you know, remember when you're trading with brokers that, you know, you're trading the over-the-counter market, you're trading a CFD market, you're not trading the actual cash or the futures market. So, you know, that can be, if you get gaps in the Forex market, because they don't happen very often, that's probably your comment's correct, they confuse you a lot, so they're probably of even more significance. A bit like divergence on a MACD chart or a RSI chart. You know, divergence doesn't happen as much as convergence, but when it does, it can be quite significant. So gaps can be quite significant. So do join me on Wednesday, we'll go through that as well. So there we go. So hide the comments, somebody's saying. There we go. There we go. So I'm going to go hide the comments because I can't see it. Yeah, that was before. It's okay. They don't want to necessarily see my face, Andrea. But anyway, let me leave you with the main players. Let's just go through it again. So Yen, dollar's up against the yen, testing that 105. Will we get to it? Who knows? Cable going the opposite direction, rejecting that 137.45. Continues to move down. We've bounced a wee bit since I've been talking, but 136.50 is big support on the higher time frames. Let's run through them all very quickly. Aussie down again to test 76. Moving down. We're at 76.25. She's bounced off that quite well. Kiwi we talked about before. Kiwi intraday support is 71.45 for the US session. 72. We've been under it. Ran to it and then dipped down from it. So again, another one that's trending lower today, having moved up. So we moved up and then moved down, moved up higher, then moved down. Interestingly, so 72 is key cap for Kiwi. CAD we talked about earlier, didn't we? That 128 we've broken and held it so far. So 128 today. Big day, obviously a big week for Canada and the United States. We've got their jobs data at the end of the week. For Canada as well, we've got the big oil companies reporting this week as well. Or more oil companies reporting this week. Chevron and Exxon. I think Exxon reported this week. Chevron was last week. Swissy, I don't know maybe you trade Swissy, but it's been an excellent trender and trader as well, just like anything else. But we were as low as 87.50. 87.56 was the low in January. Recovered from that, and we're just sort of trying to hang on to 89. But again, another strong day today for the dollar against the Swiss in particular. Swiss has had a weak day today. Swiss franc, probably the weakest of the major currencies today. 89.50 being tested again for the first time. So you can see that it's a really good chart, isn't it? It's as far as a daily chart, look, that's a significant day today to start the new month. We're at where are we? We're at 40-day high. That's a big old day there for the Swiss franc, having broken over that 89 level and held it. So if we can finish anywhere up here to that's positive for dollar against the Swiss franc moving forward. I'll leave that message on, if you don't mind, because that's quite a nice measure. Thanks, SC. There we go. Bitcoin. Nobody's asked about Bitcoin there. It's a bit unusual. People normally ask about Bitcoin. Daily remains bid, but that again, that's falling highs, isn't it? Or is it? Difficult one with Bitcoin, but clearly a bit of a flat bottom triangle there. What 29,000, certainly 30,000 is support now for Bitcoin. Lots of activity on Friday after Mr. Musk text again, but again we're moving lower again. 33. In fact, we're moving higher at the moment, but 33,000. So 30,000 key support. Want to break over 35,000 again to move higher. So big $5,000 gap there on the daily time for range there on the daily time frame for Bitcoin. Right, I will leave that. Nobody's asked about oil, so we leave the oil market. I have run out of puff at long last. Let me just finally check any more questions over on Facebook. Jason saying indexes. Please, we can see indexes. Sorry, Jason. Okay, Jason saying please. Right, indexes. Let's have a look at indexes then. If you mean Jason, if you mean the 500, 100, we'll certainly do that. So equity markets. The most important equity market in the world is the USA 500 or the S&P. People trade other equity markets, but this is the real key bellwether of all equity markets. If we look at the daily time frame, you see we're still nicely bid, literally bid, and we then last week we had this hiatus as we broke a lower, triggering lots of other short positions. So big shakeout into the end of the month. So we pushed all-time highs again, but look at these flat, not running out of steam, two fractal highs, 3,870. Shakeout. As I said before, we closed down 3.3% for the week. We were down on Friday. S&P 500 down 3.3% for the week. We were down 1.1% for the month. So although it looks positive, we're actually down on the close on Friday. That was that was Wednesday, wasn't it? Thursday. That was Friday. The big move down there, where we significantly, for the shorters here, we closed under the 50-day moving average. So it was a significant close to a very weak week on Friday. We bounced a wee bit today. Can we hold under the 50-day moving average. That's what the shorts would be saying. The longs were saying, "Oh, we're going to buy this dip." Obviously, it was the worry and the fuss about the fund managers being outmaneuvered by the guys over on Reddit and the Wall Street Bets group, taking the hedge funds and their shorting activities on full on, democratizing trading, democratizing equity trading. We'll see how it all pans out, see how it all ends, but it's obviously not going to go away. It's a bit like Bitcoin. The institutions and the establishment would like it to go away, but it's not going to go away. So anyway, so there we go. If I zoom that up. Big shakeout, close under the 50 period. So again, that's technically gone short here on Wednesday. It's already moved quite a significant way down. We moved 40 points, didn't we, from that short there at 37.45. But that certainly was a closing out of the long rather than potentially a short, but it could have certainly looked for a short position there. Interestingly, if we talk about other key equity markets, the main driver of the equity markets has been the technology stocks. They've posted quite good earnings so far this earnings season. Facebook and Apple are out. Apple, the biggest of them all. Now this week we've got Amazon and Alphabet or Google. But interestingly, on the Wednesday shakeouts, we saw the 500 break the 20-day moving average. The Nasdaq didn't here. Nasdaq 100 it supported, but then the momentum was such. On Friday, we broke the 20-period moving average. So even the Nasdaq now is under its 20-day moving average. So closing out some of these long positions to the upside. But again, it's the 50-day moving average sits down there at 12,700. So the key psychological pivot for the Nasdaq is the 13,000 level. Was it Jason? I can't remember the chap's name that was asking about. Jason Cowie, asking about the indices. So I don't know what particular indices you're trading, Jason. Do stick it in here because hopefully I'll see it. But over on, so unfortunately I'm only getting the questions from YouTube on here. But yes, so anyway, let's have a look. So for end of day traders, that might have ended that big, nice long run from that big strong. Because see how the big strong candles. So, we started with a big strong candle here on the 4th of November, and we ended with a big strong candle here on the 27th of January. But that's a nice old run, isn't it, in anybody's parlance? And see how the 20 period has provided support on the way up, last leg up, and there we go. So that is our new all-time high we posted on Tuesday. Market said enough, and huge shakeout. That Wednesday shakeout took out Tuesday, Monday, Friday, Thursday, and all of last Wednesday. So that week's run up, all obliterated on one day. But the Nasdaq, the 200-day held. So people were still in it, having lost a week's gain, perhaps. But the big shakeout was here on Friday as we went under 13,000 to 12,900. But the Nasdaq, as I say, actually closed January positive. It was up 1.42% for January. Whereas, as I said, the Dow was down 2% and the S&P 500 was down 1.1%. Interesting shakeout. Obviously nuances each of the indices. The indices relatively well bid. Again, looking forward, so all the counter arguments. Will the stimulus package be as big as they're expecting? President Biden is meeting 10 key Republicans today about this 1.9 trillion stimulus package. See how that pans out as well and holds things up. Is the vaccine rollout going to be as effective as the market is perhaps anticipating? We obviously had the hiccups in Europe with the AstraZeneca, but there's more and more companies getting more and more of their vaccine produced and more regulated, moving out from the high-income countries to the middle-income and lower-income countries. Israel has vaccinated a high percentage of their population, 24 hours a day. Some of the vaccinations are going, but as I said at the beginning, we need the medics would say you need people to get the vaccination, but there's lots of getting the vaccination as well, because it's been done too quickly, as many people see it, even though they've spent an awful lot of money, and it's been done quickly because they spent an awful lot of money at it, because there wasn't a risk, because governments were saying they were going to buy the vaccine. So although it's been done in a very compressed period of time, it's still being done efficacy-wise, very to the rules. Obviously, it's a medicine, and it's a very, very serious situation. Anyway, it's the bounce back in the economy. Again, is it going to be as good or better or worse than anticipated? And that's always the thing with markets as we move forward. So I'm going to call it a day. It's actually, let's just hang on for another 5 minutes, because we've got the key US data coming out in a minute, haven't we? It's 5 o'clock, so it's only 5 to 5. So we'll see the close of the candle, see what the data looks like, and we'll call it a day when that data comes out. Okay, so Jason, I hope I answered your question, my friend. I can't see any more questions on Facebook, but let's just hang on till the data rolls over in the next 5 minutes. So that was the indexes, and there we go. And just finally, the USA 30. I didn't look at this one, but on the daily basis, that is another one, a bit like the S&P. This actually broke it here on the broke the. Sorry, this is the S&P. Sorry, this is the Dow. It broke the 20 period and the 50-day period moving average on Wednesday. So that's as I say, we lost 2% for January. So it's the worst performer of the major indices. So again, a flatter top for longer, rolled over quite significantly at 31,000. All-time high was posted earlier in January up here at 31,000. 270, and now again, big shakeout Wednesday, big shakeout on Friday, significantly under the 50-day moving average. So again, that will have many participants seeing where we go. So the last time we broke significantly under the 50-day moving average, we went down for 3 or 4 days, and quite significantly before we bounced back. So the trend remains sort of to the upside. But if we look at the weekly trend, again, it remains above its 20-period moving average at 29,400. But clearly, you can see that, zoom it up, you can see clearly it's flat top for 4 weeks and a negative January overall for the Dow, and a very big sell-off in that final week of January as well. So let's have a look at this. It's not top of the hour yet, is it? So let's put that Reuters feed on there. That'll come quicker than my little calendar here. So 60 is anticipated. 60.5 last time. So see if this is in line with. Remember, the manufacturing PMIs around the world have been generally positive today. The China slipped and Canada slipped, but Europe was better than expected. So see what the most important of them all, the American number, comes in at today. We've got prices paid on new orders and the employment index as well. So all coming in the next minute or so. So let's see what that comes out. Don't worry about it. All right, okay, that big long query. No more questions, says my Andrea. There's no more questions on Facebook. No, it looks like it's rolled up. Sala's saying, thank you. Right, I'm just hanging around basically to see this data come. So what's Data Percent say? Unable to register for webinars for February. Error 500 is the message appearing instead of registering. Data Percent, we'll have a look at that. That shouldn't be the case. Everything should be okay. Have you just tried that now, Data Percent? Obviously, contact the support desk. Come onto the website. Tell the support guys that you can't register for webinars. So, what's the data? Let's have a look. It's just coming across the screens, and now let me just refresh that. It's only it's an internet feed. It's not my icon terminal. So, USD. Let's actually just go back to obviously the most susceptible of them all. Let's look at the euro. It's had a strong. Actually, the yen's the one that's probably interesting me more, to be honest, because it's testing this 105 area. Let's go back to the 15-minute chart. Here we go. There we go. There we go. This pre-data, we've tested that R1. See how we talked about that? We talked about it before, didn't we? This were 104.89, the R1 area. So we tested it. This is the 15-minute time frame, so we move quite quickly. So it's actually a miss, guys. It's coming at 58.7. So it's a significant miss. It's not significant, but the market PMIs earlier they're not as significant as these ISM ones. They were better. They came at 59.2, so they were a tick better. These are it's 2 and a bit, isn't it? It's 2. No, it's 1.3 worse than expected. It's not that big a drift, but it is negative. They were positive in Europe. They were negative they missed in Canada. They missed in China. So again, it's a sluggish recovery. Interestingly, though, the prices paid. So again, this is another indication of inflation might be raising its head. That came in at 82.1, much higher than expected at 77.6 from last time as well. And 77.7 was the anticipated number for this month, but that's significantly higher, 82.1 compared to 77.6. So again, another sign of perhaps inflation kicking around. New orders have slipped to 61.1, and the employment index has ticked up, ironically, although previous month was raised higher. Previous month for new orders was ticked lower. So a bit of a mixed bag there from the ISM for manufacturing out of the United States, but I'll say the market number was better than expected before. So just to recap, ISM manufacturing PMI came in at 58.7, missing expectations of 60.0, but only by 1.1, which is 2% miss. It's a fairly significant miss. So dollar rallied in anticipation, and it's starting to slip again now. So it's bounced off R1 here at 104.98. And we're at 104.94, but certainly still bid on the higher time frames. And next support on that 50-minute is at 104.90, the 1 hour candle just starting off anew, then compressing, as you can see there. So that's it for today, Monday, the 1st of February. Trade safe, everyone. Join Andrew tomorrow. Andrew's we got our webinar, two-series webinar, our two-part webinar series with Andrea tomorrow. Tomorrow is the first part on creating an intraday strategy. So lots of things Andrea will touch on tomorrow. Not necessarily in a great depth for each of the indicators, but she'll just put all these indicators together. So how to create a set of indicators, create this intraday strategy. So she'll look at different indicators tomorrow. She'll do part 2 next week on the 9th. So very nicely put together. I've seen the webinars before. Nicely put together webinars. Nice touch with the indicators and the packages they're going to put together. Market gaps with me on Wednesday. How to trade the news on Thursday with Otto this week. There are webinars this week. So do take care, everyone. And we'll see you all again soon. Trade carefully. See what Mr. or President Biden, I should say, has got to say with his Republican colleagues today. Is this stimulus package going through? Because that's really a key driver of the markets as well. So, Dr. Sand, thank you, my friend. Thank you, my friend. MHP, you're absolutely right. Nice rejection. There we go. Rejection on crude oil. Let's have a look before we go. Final chart, crude oil on the 1 hour time frame. Oh, I don't know, actually. Yeah, it's a huge candle there, huge spike. Don't know what's gone on there, but very choppy for crude oil. But again, generally bid, but compressing at the top as far as the US market's concerned. 50, as I said many times, it's 51.80, 51.50. It's been a buy zone, been a support zone. So any break under $52 for US oil, and we perhaps move down into the support area, but it's consolidating at highs. Still relatively positive. That 200-day, 20-day is held. Here we are, beginning of the new month. Oil still bid, but we could move down. We could obviously move up. 54, 55 next line. So, right, I am going to go now. It's 5 o'clock. I've been here since 3:30. Far too long. But anyway, take care, everyone. We'll see you all again soon. Trade carefully and all the best, guys. Bye now.